Something wrong. All right, so let's go this way. Poor guy. I can't explain this camera. Let's just see if that. All right, I'm gonna see what I can do.
To be here. Please hit like button, helping us reaching more people. John, let me start. We know that Steve Witkoff
Wow,
is
red
in Russia
pepperoni.
to talk and to meet with the Russian officials, basically with Vladimir Putin and his administration.
Turn that off. Red pepperoni, that's really amazing. That is really amazing. We are now and I did remove people who said they sold. It was 2 or 3 people, and I removed one other guy just because I didn't trust it. But still, this isn't meant to be an exactly perfect number. It's kind of Scout's honor. But we remain the single largest position in Railtown. We're 15,750,000 shares of Railtown. 15,750,000 shares of Railtown. It's unbelievable. It's unbelievable. Having said that, I've been unable for I don't know, a week and a half, 2 weeks. I haven't gotten any. I haven't gotten any update that's worth anything in terms of some sort of breakthrough. Anyway, I got other things on my mind. It's that time of year. It's that time of year. Speaking of that time of year, I don't think this is short. Let me just see if it is short. I don't think it is. Tuesday, December. All right, that's not a good idea. It's Advent. It's Advent, and they gave me a Advent companion. So there's a daily thing to read, but it's too long. It's not like it's anything short, so I won't trouble you with it. So anyway, our share position is 15,750,000 shares, which is incredible. Our time in the trade is essentially June, July, August, September, October, November. We're in the 7th month of our trade for those who came in June. Many of us heard about it, I want to say a year ago, but it might be 14 months ago. So that's our time frame so far. It's been a little bit discouraging in price action. On the other hand, that suppressed price, in my judgment, has allowed us to build significant positions. Let me get the price right now. Let me give it a second to update because it's showing green. There's no way in heck that it can be green. They don't let it be green. They never let it stay green. Well, what I see right now is a bid of 33.73. So the previous close was 33.77. Why do they have the bid at 33.73? So if there's a sale, it'll go red. That's all they do. They just want to torture you with red so that you just finally give up. They know something. I can't win here. It's just their game. It's just their game. The ask is 35.2. The high today, 35.4. It opened at 34.6. And, the little read I get here is there were 4,000 shares traded at 34.82, 2,000 shares at 34.82. I would suggest those were both motivated by buying. And then there's 107 shares. That's communication. That's collusion. There's something going on probably at 34.61. It just never ends. Finger Motion is down 4 cents at $1.29. You know, we'll see how the financing goes. Quantum is up 43 cents at $9. So if you bought it at $27, you're not down that much. At least you're still alive, I guess. MTEN is down 26.99 at $1.16. You still got something left. Genius, that, hey, Mark Bazile, we're hiring them, that we're fighting the shorts. Yeah. 69.99, down 3.5 cents. So Railtown is in fact up almost a penny. Last trade 34.61, 45,000 shares traded. Yesterday I made two arithmetic mistakes that I caught later. I'm embarrassed by, but we can kind of fix that today. And I would suggest to you that even though I made those mistakes, where the areas where I adjusted to be conservative, my price targets don't change. But yesterday, I told you I was using an eighth. I think used a quarter, because if you do 200 million in revenue from hosting at an eighth, that's 25 million. Somehow I took that 25 million and doubled it. So I was saying 50 million. Well, I can tell you a couple of ways that number probably isn't too far off. Number one, the amount of revenue from hosting could be much higher. It could be 250, 300 million. Number two, the revenue sharing agreement might be 15% instead of an eighth. It might be 20%, So we don't know. So those are two areas. I think by using a low number on the revenue sharing at an eighth, I kind of adjusted for my arithmetic error, although I didn't mean to make that mistake. Also, I think the target hosting revenue that I came up with is low. But we just don't know any of that. We don't know any of it yet. I thought what we could do today, I had to go down to my bank. I was overdrawn, and I was trying to get some of the overdraft fees. I have these automatic debits like for the computer and for the phone and for the service that I use. But they didn't give me anything back, but I tried anyway. But I really appreciate everybody that donated money. I was able to bring my balance to even and slightly ahead. But man, they dinged me for some overdraft fees. But I'm very appreciative that you guys chipped in and essentially I was able to pay Verizon a bit on my this service I use to go live, and I don't know. There's other automatic charges for my computer, Apple and everything. Anyway, as they came in, it's too much. So I went down there, came back. It's raining. I didn't have time to type up what we're going to do, but that's all right. That way I won't make a mistake. We can do it live. We can do it live right now and talk about revenue. Yesterday, I tried to get you to focus on Railtown's hosting revenue. and that's it. So why don't we come up with a number for hosting? I was wrong. My calculations were just simply incorrect yesterday. I don't know why, but that's what happened. But if in the document it shows there's 120 million in hosting cost, if we add, I don't know, 30 million for growth, because they increase the number of companies and the companies are growing. If we add, TELUS is going to direct business their clients. They have over 100 million clients. Some of them have to be enterprises and companies. They're going to direct them to their new data center, and they're going to also direct them to Conductor. We don't know. We've got to find out, but I'm going to assume that could be a big number. And then I don't know what to call it. I'll just call it the pipeline. Univest, digital, even AIPs, 5,000 companies, other. I don't know. I would say that Railtown could achieve, again, always forward looking, hosting revenue, telling the companies at Univest, move your, now there's a conflict there. Maybe Univest has to move all of their hosting over because Univest isn't a hosting service. But anyway, some number of those, some number of digital, the 5,000 companies at AIP and other projects that Railtown might have, I think they could find hosting revenues. So let's say by the end of the first quarter, the revenues from hosting could be 225 million from all sources, 120 that we know about. Again, these revenues just have to be projectable. They don't have to be booked. So if it takes 4 months to move everything or 8 months to move everything, as long as it's out there, once they move, these revenues, hosting revenues, will stay for 20, 30 years or longer. So 120 from the current company's hosting costs, the growth in more companies, growth of business, I said 30 million. The TELUS companies, man, they've got over 130 million users. If they just have 1 million companies that move over to host with Conductor, that's 1% of their clients. Anyway, I just said 50 million there. And then the pipeline, which would be all of these, AIP, there's 5,000 companies they can sell to. Other are some of the announced deals and things we don't know about. Uniserve has 3,000 companies. Digital has 14,000. Enterprises, although I don't know their appetite at all for the Conductor product. It may be zero. But anyway, I put 25 million in there. So if the hosting, let's say by the end of the first quarter, can forward project 225 million to TELUS, top line to TELUS. And Railtown can keep 15%. I just increased my percentage from yesterday. 225. That would be 33,750,000 from hosting. Let's say by the end of the first quarter that the company could forward project for the next 12 months. 33 million in annual recurring revenue. And that would definitely recur. Well, then you've got the roll-up business, which I'm going to, for ease of calculations, I'm going to say from now to the end of the year, and also throughout the first quarter, they don't roll up anybody because they want to make sure the stock price is higher, and they already control that. This is how I would think. I already control that business. Let's go lock down the things that aren't under control yet. So I'm going to assume nothing for the roll-up revenue by the end of the first quarter, although there's 400 million plus in roll-up revenue to go get. So then that leaves the revenue from Conductor and the other four products. Railtown's bread and butter. What kind of revenue can we expect from them? Well, I think it's the pipeline, both what we know already and what we don't know, and what is yet to be. Their marketing efforts, companies coming in. So there's a handful of companies. They've already announced to us revenue deals without the revenue, of course. And then I would argue that the pipeline, there's a backlog in the pipeline. And I would further argue there's going to be new business. So this pipeline has those three broad categories. The magnitude of that pipeline, we can't know. But we do know that Uniserve is 3,000 companies. We do know that these others have their audiences. AIP, 5,000 companies for cross-selling. We do know that well, I don't know what else we know. We really don't know what revenue per company is projected. We don't know how the revenue is broken down. Do they get paid a big slug up front, and then they get on a subscription basis? We don't know all that stuff. But if we assume out of 3,000 companies at Uniserve, they convinced 30 companies to use Conductor at all. And if we assume out of 5,000 companies in the AIP group, they convinced 50 companies to use Conductor. And if we assume out of digital, which is 14,000 entities. I have no idea their interest level. The 6, 7 companies who have already announced deals, other deals that are outside of um, AIP and outside of Uniserve and outside of the pipeline, we don't know. If we just assume they get, I don't know, 25 of those, I would submit these are low estimates, but we'll find out. That's 105 companies signing up for the conductor direct, as an enterprise sales agreement. Do they get something up front? Is it done as a subscription agreement? We don't know. But if we assumed on those 105 companies that the annual recurring revenue averaged $500,000 a year, and I personally think that's low. That'd be 11 million in annual revenue, I think. Let me see. No, it wouldn't. Sorry about that. I hit the wrong number. It would be 52,500,000. 52,500,000. And it looks like that's right. So that, I think, from the conductor standpoint, conductor and the rest of them, maybe by the end of the first quarter, they can show the market that they're going to be able to get 52,500,000 in revenue. And so I think those are your 3 areas of revenue: the hosting, the roll-up, and conductor. I'm assuming nothing for roll-ups by the end of the first quarter. For hosting, assuming 33,750,000, and for the pipeline, which they've been working on for 10 months, I hope, and they'll have another 4 months to lock everything down, I'm assuming they can project sometime next year going forward 52,500,000. That's slightly over 100 companies at 500,000 each. That seems like a high number. Let me just do it again. 105 times 500,000. Yeah, it's 52,500,000. Okay, so if you add those two numbers up, and 0 for rolling up, you get annual recurring revenue at the end of the first quarter of 86,250,000. I mean, you guys can do your own estimates yourself. You can do it every day. Pull out a pad of paper. You've got the hosting revenue that we know about, the revenue sharing. You've got roll-up revenue, which is to roll up 400 million eventually, but I'm assuming 0 from that by the end of the first quarter, including the projections. I think an analyst would project that with the roll-ups during the next 12 months, they could bring in 50 to 150 million in revenue. But I'm just assuming 0 to be conservative. And then the pipeline, if they're first to market, if they're best in class, they have a whole network, they have a whole group to sell to. So I'm basically saying 105 companies at $500,000 each on average. I have no idea. I mean, that's the problem. But that's why I left the roll-ups as zero. I left probably 100 million to 150 million out, just ignoring the roll-ups. So that's 86,250,000. Let's just use 3 multiples. I'll use 7. 7 is so low. That would give you $600 million, 603, 750,000 market cap target for Railtown. Now, I didn't assume anything for the roll-up, so that also means I'm assuming no significant share issuance. So let's just divide. Probably the number of shares outstanding right now is around 230 million, give or take. I don't know for sure. We'll find out with the financials. But let's just use 250 million to try to include, any bonuses that have been paid. So at a 7 multiple on those revenues, which I think are conservative, again, looking at somewhat over 30 million in hosting revenue, which will grow and will last. It's not one-off. It'll be every year, repeating for sure. And just basically 100 companies in the pipeline by the end of the first quarter looking forward. So analysts will see their sales book. Analysts will see the number of companies that are working with them, and we'll put some estimates on what can close during the year. I put 0 on the roll-ups. This presentation says they're working on 3 to 5 companies already, and you got to believe those are the best. But I'm assuming 0 for that. That could be 50 million, that could be 75 million, 100 million, 150 million. We don't know. But I'm assuming 0. I'm putting 52.5 on the pipeline. So again, my starting point is 86,250,000 at 7x. At 7x. That's $2.41 a share. Well, $2.42 a share if you round it up. $2.42 a share at 7x. That's pretty amazing. It's pretty amazing. So the stock right now, I believe, just on what we can project on revenues as, I guess not quite a certainty, but being as conservative as we can. I think. I mean, remember, they're going to be addressing 3,000 companies in Uniserve. Over 100 million clients from TELUS. I left that out. How many are corporate? 100,000? A million? I don't know. They have 5,000 companies in the AIP network, which they've been cross-selling to. And Dr. Tom Core said in his press release of February 11th that conductor had broad applicability to their entire network. And then, digital has 14,000, but maybe there's not many there. They've been talking to other companies. Anyway, I think saying 105 companies is very conservative. 500,000, is that conservative? I would guess they're not going to do business with any company that doesn't give them over 1 million, but I don't know the answer. We have to find that out. So, and then the roll-up companies, they have 400 million. They've already targeted some companies. Are next year, during all of next year, are they going to roll up 0 of those companies? Or are they going to roll up the best of the revenue? But I said 0 for roll-up. So anyway, if you take this number at 25x, which I think is a pretty low multiple, but it might be reasonable if you want to be conservative, you get 2,156,250,000. If you divide it by 250 million shares, you get $8.63 as your target. $8.63. That's, again, I'm just suggesting maybe by the end of the first quarter. It could be much, much sooner than that. As soon as institutional analyst or buyer figures their own calculations out, this could happen much sooner. Or analysts write something like this. Well, what if we just use a higher end multiple of 50? Remember, multiples are much higher than this now. That gives a $4 billion target. 4,312,500,000. If you use 250 million shares, that gives you a 1725 target. 1725. So where's the weakness in my thinking? Oh, there's no hosting revenue? Well, we know there's 120 million in hosting revenue. It's in the corporate presentation. I mean, I guess they could be lying, but it's there. We know that the revenue sharing will be 100% profit to Railtown. We know that the hosting revenue is based on approximately 160, 170 million companies, not million, 160 or 170 companies. And we know from the same presentation, which is confusing, that the number of companies is now over 180 or 185. So I think we can extrapolate some growth in that hosting cost. It's an expense on the part of these network companies, but it's also becomes a revenue to Railtown. Railtown now owns AIP. So am I wrong to assume hosting revenue? The way the stock's trading at 49, well, let's see what it says today. Market cap today of Doesn't say. Oh, there it is, 49 million. So Railtown currently, according to this application, says that the market cap is 49 million. If we divide 49 million by 7, so that's our multiple. That's the company, that's assuming the company will do 7 million in annualized revenue next year, annualized recurring revenue. Well, we know the hosting is 120 million. So this seems absurd. If we take the 49 million and divide it by a multiple of 25, the current market cap of Railtown, if you believe that the price is telling you something, is projecting 1,960,000 in annual recurring revenue for the 12 months next year. Does that make sense? The hosting alone, 120 million. I don't know if I have it here. Here, number 6, opportunity to move acquired and non-acquired affiliates who currently spend 120 million per year with various hyperscalers. They'll move that to TELUS. There's 120 million there. So the market, if in fact the price is telling you something, at a 25 multiple, today's stock price is telling you they'll do 2 million in revenue next year. It's right there in the presentation. There's 120 million that they can, I think they will, because they control AIP. They're going to move over to TELUS, and they're going to split. I don't know, do they get 15% of that? Do they get 20% of that? At 20%, it's 20 million in revenue for Railtown. And the market at 100 million hosting. The market is saying at 25 multiple, which is a cheap multiple in this space, that next year the company's going to do 2 million in revenue. So if you argue to me that the price is telling you something, something's askew. If you use a 50 multiple, the market today is telling you that the company's going to do 1 million in revenue next year. Does that make any sense? So I think just on the, I used here 15% of over 200 million in hosting revenue, but you can play with it whatever way you want. You can use a lower number, but I came up with 33 million, almost 34 million in revenue projected next year. Remember, once it ramps up and then is annualized in the hosting space, it's going to stay there. This is a mispriced stock. It's totally mispriced. That's my opinion. Is Conductor going to generate revenues that they can project? Is Conductor already technologically obsolete? Has Langchain beaten them to the game? Has Sequoia somebody else that's better? Well, I guess technically we don't know for sure. But it's a hell of an assumption to make that these guys who have dedicated themselves to software their entire career created something that's already obsolete. It's possible. It's possible. But I'm not sure it's credible yet. So, I mean, take a different number. Assume that they can project Conductor is going to do 100 million in the 12 months, and the hosting will grow to 50 million. Ignoring rollups, you got 150 million. And you multiply that times 25. And you divide, that's 3.75 billion. Divide that by 250 million shares. That's a $15 target at a 25 multiple. At a 50 multiple, that's $30 a share. I mean, these are things you can do yourself. I don't think we can say that we actually know anything, and that's a handicap we have. But I think we have some information in the corporate presentation, in some of their news releases, that allows us to make some assumptions. And as, of course, assumptions, you make a fool out of umption. And you make an ass out of umption and you. All right, let me go to the OPA, Pete, OPA. The stock just traded at 35. You know, I might be seeing what I want to see, but it feels like the stock price is gaining purchase and it's starting to want to just go up. I think the churning feels like it's over, but I might be, you know, trying too hard to see that. Hey, Julius, good things coming. Yes, sir. Silver skyrocket. Red pepper, Ronnie. Hello. Red pepper. Wow. That's a good total. It's a very good total. I forget what your handle is. Is it YouTube user? Anyway, hi, Jim. Hello to you and to everybody. Hey, Donna. Hello to you, Donna. I know Red Pepperoni. I know you. We can trust your number. I know that. Red Pepperoni, you need to be on the board. Well, yeah, they don't need me. They don't need me. It's an interesting idea, though. I'd have to shut this down, and then we'd have to communicate through a more private system, which is fine. I'd be fine with that. I can't wait to stop doing this in this iteration. These lower, not Railtown, but these other lower price stocks, they're just not where we want to be. And in fact, I'm not sure how much longer we have that the stock market is going to be normal. maybe 6 to 9 months. Account settings. Good afternoon, William. How are you, everyone? My new total. All right. That's a fantastic total. You guys are impressing me. You guys are impressing me. Hey, Fast Eddie. How are you? Hey, Steve. How are you doing? Jack Hamilton says hello to me. Hello to Donna and all Railtown fans. Ward Richardson. Good afternoon, William and RT crew. It sure is quiet, like it gets before a storm. I agree with that. Ward Richardson, Amazon recently opened up Project Rainier, $11 billion AI center to train anthropic models and run inference. That's Amazon. I'm sure they're doing it for the CIA. Red Pepper. Hey, William, can you explain the roll-ups concept? Yeah, I can. Rolling up companies is something that happens in industry after industry. Another way of thinking of it is consolidation. If you have if you had in London, for example, when I first moved there weren't really any coffee shops, or there weren't many. There were tea places you could get to have tea, or you could get a cup of coffee wherever you were, but there weren't really that many dedicated shops. So a young couple, I met them. I don't remember their names. They bought a coffee shop. They were in their late 20s, and they expanded to, I think, 7 stores over the course of a few years. And to my memory, Starbucks came in and bought them. Well, that's kind of the roll-up concept in 2 stages. One is the company started with 1 store that they bought, and then they expanded. I don't know if they bought those other stores, but they expanded to 6 or 7 stores. I think they sold it to Starbucks for, gosh, my memory's like $20 million, $27 million. But anyway, Starbucks rolled up that little company of 7 stores into Starbucks's bigger network. That's all a roll-up is. It's a consolidation of a fragmented market. So it happens in industry after industry, where I'm trying to remember others. I mean, it happens in the power industry. It happens in sometimes it happens in oil and gas. But the concept is you can consolidate or agglomerate a bunch of smaller companies that just don't have much market presence, don't have the ability to experience the benefit of volume so that their costs per unit go down, and management is expensive on a per product basis. So by consolidating, you can bring money, technological know-how, and you can reduce overhead and conceptually reduce costs across the whole group of companies you've consolidated. And the net effect is more profits. Full stop. That's the goal. In the case of Railtown, what they're doing is imitating Constellation Software. The symbol is CSU on the Canadian. And Constellation Software, approximately 20 years ago, IPO'd after John Ruffalo and Mike Norbrega were the 25 million, or they were a critical component of the 25 million that financed Constellation Software. And all Constellation Software's idea was, let's go take the entrenched software companies entrenched in a vertical way with one or two or three clients or more, I guess, where the client is unlikely to switch because that software company is all up in there, so to speak. They know the principles, they know the software, they know the corporate data. The friction to transfer would be very difficult. But those software companies that Constellation Software was going after were small. They were under 5 million. I don't know as time went by, but my memory is they were under $5 million. Maybe it was a different number, but essentially they were too small for these bigger companies on Wall Street to go buy them. So what Leonard, the founder of Constellation Software, he said, let's just roll these up. In other words, let's acquire them. We'll roll them up to our company. And I think he set up a parent company that was different. I don't know how he did it, but it feels like he did it where Constellation Software set up this intermediary company where Constellation Software gets, 60% of the revenue, and then the company gets 40% of the revenue. But Constellation is giving their know-how and balance sheet for loans and giving capital. But anyway, it feels like there was a layer in there of a different ownership structure. I don't know. But net, Constellation's idea was, let's buy these companies, we'll roll them up, we'll bring them into our Death Star of a company, and then we, in the case of Constellation Software, we'll split the revenues probably to our favor, but we'll let the management stay in and get bonuses, so we're not increasing overhead. That was their strategy. Over time, when they went public, to my memory, they had 149 of these companies that they had rolled up. They had purchased and combined into one entity. Well, those cash flows allowed them to go public. And in the case of Constellation Software, over the next 15 years or so, they never issued any more stock. But because of their cash flow and because of their credit, they were able to acquire additional companies for cash, rolling them up, bringing them up to the Death Star, incorporating them into the parent company in some sort of structure. And Constellation Software went from under $10 a share to $5,000 a share in Canada. And the key financial movers for that transaction early on were Mike Norbrega and John Ruffalo, Omer's Ventures, which in a way has morphed into a new entity completely. But John Ruffalo created Mavericks Ventures. So all of those investors involved with it just had a tremendous experience of the Constellation Software idea of rolling up small vertically integrated, I guess you'd call it, software companies, too small for the big boys to acquire. They just made their bread and butter rolling these companies up. And one strategy Leonard had is, let's just leave local management in place. Give them bonuses. And it worked beautifully. So AIP came up with the idea, or its founders did. The founders, John Ruffalo, Mike Norbrega, and Dr. Tom Core, the founders said, hey, why don't we just do what Constellation Software did? Let's take a fragmented industry, a whole group of companies, and let's one by one acquire them and roll it up into one company, however it's structured. And however they are going to do it, we'll split the revenues or that's something they haven't described. So AIP is just like an association. It's like AAA or AARP. You send your dues, and then they have a headquarters somewhere, and they have a bunch of members. The AIP network partnership is just essentially that. It's a bunch of companies that pay their dues, and it's headquartered in Toronto. But that network of companies, which Railtown just bought, does over $400 million in revenue currently. It's all vertical. It's not the idea of ChatGPT where it's horizontal across the internet. It's all vertical, specific to each company, at least as I understand it. And it's really not my space. So if I'm using the wrong vocabulary, I'm doing my best. But that network of 100, now probably 190 companies doing probably 450, I don't know what, over 400 million in revenue. The goal is to acquire them one by one with shares. That's why they won't do it down here. they acquire them, but with shares at a discount, bring those companies up to the mothership, the Darth Vader, the Death Star, and accumulate it all up in one bigger, ever growing company, you know, consolidated, amalgamated type company, and the revenues grow, the margins grow, and the whole idea is to replicate the Constellation software all over again. It's a way of taking a highly fragmented industry. It'd be like here in DC, there used to be a lot of independent cab companies, taxi cab companies. And decades ago, this one guy came in and rolled them all up, acquired them all independently, but rolled it all up into red top cab and or yellow cab. You know, there's two or three that have done it. So it's just the consolidating of a highly fragmented industry into one concentrated company. So you take an industry where maybe each of the companies do less than 1% of the industry's revenue. You acquire them and you roll them up into a one company concept. And so you take 100 companies that collectively were each doing, you know, I don't know, 15% of a market, but individually they didn't even register. By acquiring them, rolling them up to this bigger company, you suddenly have bulk, you have pricing power, and you get all the benefits of now having consolidated 15% of this highly fragmented market all into one company. That's the idea behind roll-ups. Roll-up is short for acquiring a company, integrating it into your system, and absorbing it as part of your larger framework. That's a very long-winded explanation because I don't know how to say it succinctly. You're welcome. Richard K. Hi, Lucky and William. I love hearing about sales, pipelines, and funnels. What matters is the ink and payments in the end. When does the ink start flowing? That's something we don't know, but we do know on the hosting, those companies are already spending over 120 million. On the enterprise sales agreements, I mean, it's a good point. We really don't know the revenues, and we really don't know what you're saying, what you're asking. When do the contracts get signed, and how long is the fulfillment process so that money starts flowing? And I just don't know. They're going to build these agents, or they're going to build these systems for each company, and they're going to have their specific user case. Do they have to pay something up front to get that build out done? Or do they just build it out for free and then it's all incorporated into a monthly or annual subscription cost? I don't know, or maybe it's a combo. We'll find out. We'll find out. That you are right, Richard. That's what we're waiting for. And that's the frustration, of course, this waiting. I mean, who would have thought? I mean, I can think of at least one person. Who would have thought that after the AIP deal was announced, the stock would be cheaper than what it's been for about half of the time over the last year. Yeah, though, Brandon, those milestones are so puny. I think I know your point, which is, I think I understand it, which is they're going to at least do 2 million, which is kind of what the stock price is projecting at 25x, maybe 30x. But those milestones, I think were, and I have no way of knowing this for sure, I think they were a face-saving way of paying AIP more than what was initially modeled based on the third-party evaluation, because those thresholds are just, you could do them in your sleep if you're just in operation. So I choose not to focus on those thresholds at all and just presume that the entire 50 million shares are going to be assigned and therefore issued. It's less than that now. It's like 49 million something. And there is about 1 million shares that are held back for cost overruns, is how I'd describe it, for just a little bit of a buffer if legal costs go higher than they anticipated, or I don't know, filing fees or something. But I don't really think that that'll get eaten into too much either. If there's there's a dispute with an employee and you have to pay them off. I just really expect the full allocation of shares will be assigned to AIP. Brandon Neely, what does this mean in the article about the deal closing? They only expect 2 million from AIP? No. I mean, it's interesting you read it that way, and maybe there are others that read it that way, and maybe that is why the stock is where it's now. But no, it's a ridiculously low threshold to trigger the earnout of the shares. I mean, it's like I say, they're going to get that done right away. But it does build in place a couple of slow release strategies for the shares, so they don't all get dumped on the market right away. I mean, they release the shares over a 36-month period. Starting with that, it's how I remember reading it. But no, the 1 million and the 2 million are not the expected annual revenues. They're the minimum work that AIP has to do to earn these shares. And I mean, I don't know why they bothered. It's so small. But like I say, I think they put it in for face-saving reasons, that they negotiated something. A lot of this is going to be that everybody's working together for the common goal of getting Railtown stock price up, because everybody's going to own a large position of that stock. Dirty Randy. Tough to go to $8.63 when my daughter's piggy bank has more buying power than all of Canada. Yes, yes. I see your point. I see your point. I heard that Jakarta, who is the world's largest city now by population, Jakarta has more people than all of Canada. One little city has probably several cities that have more people than all of Canada. Is the roll-up just taking an individual AIP company and formally absorbing its product into Railtown? Yeah, that's one way of looking at it. But we don't know. We don't know. But my guess is um, we don't know how it's going to be done. They have AIP now is a subsidiary of Railtown. So my guess is at a minimum, it's the subsidiary that'll roll up these companies, and then the revenue will flow upward to Railtown. But they may even create an additional layer of a corporate structure. So, it's like Constellation Software did, so that you could set up a revenue sharing agreement, but maybe 60-40, 70-30. So current management of the company has an upside in the revenue, but also such that maybe Railtown provides the capital and the technological know-how and maybe financing power to grow the company. I don't know. We've got to find out what the model is. But yes, you've essentially got it. They would roll up the company into Railtown's own company. But there'll be layers of structure. Donna, hi, Jack and Ward. We're leaving for Florida tomorrow. Won't be back until May when you're rich. I'm looking forward to seeing how we like being snowbirds 6 months a year in a 55 and above retirement community. Well, at least everyone will know who wrote and sang Afternoon Delight. T. Alex, Hi, William and everyone. Hello. Jack Hamilton. Nicely played, Donna. I'm sneaking down to the Keys in a couple of weeks, but only for 19 days, then back to work. And yes, I'm jealous, Donna. I will try to join your travel routine in 5 to 10 years. Ward says, hi, Donna. That sounds like a lot of fun ahead of you. Maybe you'll come back as a multimillionaire. Yeah, I hope so. Donna, I can't wait till we all make money in real time. Yeah. I have a really hard time seeing that this stock is correctly priced. Um, at a 50 million market cap with a 25x multiple on revenue, the the price of the stock is saying they're going to do 2 million at a 25x. They're going to do 2 million in revenue next year. That's about as bleak as it could be. At a 50 multiple, it's saying they're going to do 1 million in revenue. I just don't think the stock's priced correctly. Red pepperoni consolidation makes sense. Thanks, William. Yeah, I think that might be the better word. Pat and Donna, my friend, goes down every year and loves it. Took her a couple of tries at different places to find her favorite. Railtown is now bidding 35 cents with 31,475 on the bid. And it doesn't seem like, well, now it is. Now the bid's 50,000 shares at 33.73. So somebody just did a big block at 35, I bet. Yeah. They just sold. Somebody hit the bid. 19,700 at 13.5 at 35, 19,700 at 35, 11,775 at 35, 14,069 at 35. Those could be real trades, but they also could be communication, the way those end numbers are. But they just hit the bid for 40, 50, 60, about 65,000 shares, 63,000 shares. They just hit the bid. It's so swell. So 35 became the ask, and now the bid is 50,000 at 33.73. The volume shows 106,000 now. I wonder what's going on in Canada. According to Yahoo, the volume in Canada is 39 million. But the stock's up. Well, it's giving me how much the stock is up over 2 years. That doesn't really help. The stock's barely up in Canada, 48.25 in Canada, with 39,000 shares volume. That was a huge knock to the bid, and it barely shuddered. It barely gave way. So um, I would guess the selling wasn't real, but you never know. You never know. No way to tell. Hi, I'm Almost Legend. Hello, all. Trailblazing Tuesday. Sir William, here's a fun, thoughtful question. If you won, say, 10 million in the lottery after taxes, how much Railtown would you buy, if anything? 10 million? Well, I think if I suddenly had $10 million, I think I would try to create some cash flow with it, or buy silver, or buy some mining shares, all with some of it. But I think right now, if I got 10 million this week, I think I'd try to put it all into Railtown. I'd probably call up the company and say, hey, do you have an offering going on? I'd like to buy directly. But I think I would, I guess that's my I mean, I don't think that's a particularly good, necessarily a good thing for me to say, because it shows that I'm blinded by Railtown. But on the other hand, I really think Railtown is going to give you 10x very quickly. So if I could put the majority of $10 million into Railtown, I have no idea if I'd move the price of the stock or not. But let's say I could put it all in under 50 cents. I think it'll go to $5. So my 10 million would be worth 100 million. And then I could go do those things if I so desired that at that time. I think his name is William J. O'Neill. I think the guy that I think he founded Investor Business Daily newspaper, but he's the first guy that in his a group of us, I think we subscribed to him, or I did by myself, or it was free. But I used to listen to him and get his charts and subscribe, and read his book. I think this is all a long time ago. But to my memory, he was the first person that etched into my memory that um, diversification isn't really the best way to invest unless you're wealthy and your lifestyle's exactly where you want it to be, and you don't want to risk losing that lifestyle. Then diversification makes some sense. But if you're trying to make money, diversification is a cumbersome way to do it. So he suggested concentrating your position. And if you really know something, maybe all the way down to one position. So I guess if I inherited $10 million, I'd probably put enough money aside that I could, cover all my bills and expenses for 6 months or a year. And I think silver's already tripled. I think it's going to double from here. But Railtown, I think, is going to give you 10 or 20x. Some of the mining shares, I think, are going to do fantastically. But between now and maybe 6 months from now, I think Railtown could give you from 35. I think Railtown could give you 100x. So I guess I would start by calling the company and saying, can I visit you? And do you have an offering? Because it might be more beneficial to you if I gave this money directly to you than to the market. But I think I'd put the money into Railtown. I mean, on Railtown, you've got somewhere between 20 and 25x just to catch up with Sequoia's valuation of Langchain. So is Sequoia wrong, or is this market wrong? I pick the market's wrong. Sequoia for now is correct. And so you've got 20x ahead of you, or more, just to catch up to Sequoia's valuation of Langchain. I can't think of anything else out there that's going to give you that kind of exposure over the next 3, 6, 9 months. Really can't. And then once you've taken that amount of money to the higher level, there'll still be opportunities that are brought to you, and you can just put tiny little bits of money on an overall basis in anything, but without risking your account. I would put it in Railtown. I believe Railtown has first to market, best in class software solution, which is tied to AI, uses AI, and I do not think they lost their technological lead while they acquired AIP. But we got to learn that. There's no way I can tell you that I know that for sure. So we have to learn that. But man, it's bloody cheap. But I'd like to, there's some mining companies I'd like to own. There's some gold companies I'd like to own. I'd certainly like to own the income off of some producing oil and gas projects. There's precious metals I'd like to own, silver, gold, and John Croissant has me believing on platinum. So there are alternatives to Railtown, but I think if I got $10 million tomorrow, I would certainly consider maybe put aside $1 million, not $1 million, maybe 100,000 for a year's worth of expenses, and then put it into Railtown. With that kind of money, though, I would probably call the company and ask if I could do some sort of senior investment that offered a little bit of protection. But I'm sure they wouldn't take it that way. So that would leave just straight up investing in the stock, and I'd do so. I would do so right now. Ward Richardson, the press room needs to make major adjustments as soon as possible. Well, we don't know. There might be a quiet period going on in the truest sense of the word right now, which is I think they owe us financials. So they may not be able to talk till they get their quarterly report done, or their monthly report, or their annual report, however it works. That might be going on right now. I like the word, I forgot who gave me that idea. I like the word confidentiality period. That period might be going on a little bit longer than just the AIP closing. It may be tied to Talus's revenue sharing agreement. It may be tied to some other transaction that needs to be disclosed. But all of that probably has little to do with their press room right now. But there's no question, Ward, the company needs to spend some money on administrative staff. But what's their priority? Is their priority to lock down the revenue deals? Or to hire staff? I would guess they're going to focus on their sales deals first. Donna says, hi, I'm almost legend. Donna says, Pat, we stayed at the Donna says, we were there 3 weeks in October and both of us loved it. I'm almost legend says hi to Donna. And Solomon's Treasure says, I bought 25. I think Solomon's Treasure has a sense of humor. His wife told him he doesn't have enough. So he bought 2,500 more. That's great. Brandon Neely, I was just asking about milestones because it seemed, yeah, it's so low. It's so low. It's embarrassing how low it is. I mean, it's almost, I guess they had to disclose it the way they did because that's the agreement, but it's almost a joke to me. I think I would have put it in a footnote. I would have said we're paying 50 million shares unless, we need to claw back 1 million for some overruns. But these other stages, they're just not worth talking about because they're definitely going to be fulfilled. But I agree with you. Very low expectations. I don't think it's the expectation more than after negotiations, that's what's got it done. And like, I think you noticed it's kind of silly. Fingers down 0.046 at $1.28. Well, now it's down 0.04 at 128.90. So 129. Quantum is up at almost a buck at 9.49. MTEN's down almost 20 cents at 124. Genius is doing really well. Snowmageddon is coming. Oh my gosh, how does a truck cab hang on? There's this, oh, I see, they have a crane. Ah, it's just scary. Donald Trump taking a nap during a cabinet meeting. Well, not much in the news. Maybe we can see what's going on in the precious metals market. Putin is ready for war. A nor'easter dumps snow in the northeast. This is important. Quantitative tightening ends this quarter. It ends today. Quantitative tightening started in the middle of 2022, but its cumulative effects showed up this year. The active process of balance sheet shrinking is set to end today, December 1. And Goldman Sachs estimates that reserves should finish the year at 2.9 trillion, about 100 billion above their late October trough. It will not be long before we reach ample reserves. Well, that could fuel, simplistically, that could fuel the rally in the market. A Pfizer influenza vaccine failed clinical trial. Yeah, sounds perfect. The Chinese property market is on the verge of fresh collapse as Vanke bonds implode. China Vanke, a Chinese real estate giant, Shenzhen-based Vanke became the nation's largest builder by sales, told bondholders Monday that it was seeking a one-year delay to pay 2 billion won note, originally due December 15th. Wow, the price of the Vanke bond plunged to 27 won from par. Basically worthless. Michael Burry is once again going to try and short Tesla. U.S. natural gas hits 3-year high as forecasts point to a long, cold winter. Copper is hitting record highs. Why could that be? Data centers? Britain is lost. All right, it's 2:52. The news is depressing. Let me see if I can change our subject to something more interesting. Okay. Let's look at the prices quickly. Railtown is still up slightly. And Finger is still, anyway, let's not go through the red. Railtown last trade 34.62, 111,000 shares volume, 33.4 by 35. And 100 shares went off at 34.62. 283 shares went off at 35.37. Wow. But 14,069 went off at 35. 11,775 went off at 35. 19,700 went off at 35. I'd say the stock's going upward. Okay, let's see what's going on with the Morgan report. Yeah, the silver market. It's rocking and rolling. After 15 years of suspended reality, such as zero interest rates, unlimited liquidity, and massive deficit spending, the bill is due. When the Fed pushed rates from 0% to 5% at record speed, it instantly doubled, and in some cases tripled, the cost of servicing existing debt. Interest expense has exploded from roughly 300 billion annually, I guess, a decade ago to nearly $1 trillion today. And it's on track to exceed Social Security's annual budget, just interest on the debt. When interest service exceeds national defense and competes with the most extensive entitlement programs, you're no longer talking about policy mismanagement. You were looking at a sovereign balance sheet past the point of sustainability. The structure of the debt itself magnifies this problem. During the ZIRP, zero interest rate policy, during the ZIRP years, the Treasury issued mountains of short-term paper because it was cheap to issue. Why didn't they do long-term? That short-term strategy is now financially suicidal. I'm just reading the David Morgan letter, YouTube. Trillions of dollars are rolling over into a high yield environment. And the refinancing shock is unlike anything the government has faced since the Civil War issuance binge. Every month brings another wave of refinancing, and each wave increases the federal interest burden. The government must now borrow more simply to service the interest on what it has already borrowed. The classic and final stage of a debt spiral. Treasury issuance is cannibalizing the real economy, with deficits running at 1.8 to 2.5 trillion per year. Gulp. Treasury needs nearly unlimited demand for its paper. But every dollar that flows into Treasury bills, notes, and bonds is a dollar stripped out of business lending, mortgages, autos, commercial credit, and small business financing. The federal government is now consuming the capital markets. Banks are tightening because they have no choice. Rising rates crush the mark-to-market value of their bond portfolios. Banks are sitting on up to 600 billion in unrealized losses. That means less lending, fewer credit lines, higher standards, and reduced liquidity. When credit tightens simultaneously at both the public and private levels, a recession becomes unavoidable. The consumer is faltering. Delinquencies are accelerating in every category: auto, credit card, small business, and renters. Credit card APRs in the mid-20s are unsustainable. Car loan rates at 8 to 12% are freezing out the bottom half of the market. Housing has seized up entirely. Affordability is at a 40-year low, and unit volume is collapsing. Suddenly, I'm depressed. Treasury auctions are where the truth first shows up. And the auctions are now revealing a problem the government cannot hide. Demand for U.S. debt is weakening, and yields must rise to compensate. We are seeing declining bid to cover ratios, weaker indirect foreign participation, larger tails. Everywhere you go, you see larger tails. Primary dealers absorbing more unsold paper. These are not random anomalies. The world's largest bond market is being repriced under stress. You know, I wonder if that'll continue, but that's what we've talked about for a long time, is the Fed doesn't really control interest rates. It's the bond market. When auctions weaken, yields climb. When yields climb, borrowing costs surge. Foreign buyers aren't coming to the rescue. China is reducing its treasury holdings for strategic and economic reasons. Oh, they just might need the money. And they might want the yuan down. I don't know. Japan is selling to protect the yen. Oil exporters are shifting reserves into gold. U.S. pension funds are already overloaded with duration risk. U.S. households can't absorb trillions in new issuance. That leaves the banks, and they're all full. They're already full. This is where the Fed becomes trapped. If the Fed cuts rates meaningfully to stimulate the economy, inflation will reignite because the structural drivers, energy, supply chain reshoring, labor scarcity, haven't disappeared. If the Fed doesn't cut, the economy will continue to contract because the cost of capital remains too high. Too damn high. The corporate sector is the next in line of fire. Over $1 trillion in corporate debt must be refinanced by 2025. Wow, that's only 4 more weeks. High yield issuers who borrowed at 4 to 6% must now refinance at 10 to 13%. Investment grade issuers who locked in 2 to 3% are now facing 6 to 7%. These rates obliterate margins and force cost-cutting layoffs, delayed projects, and halted capex. Suddenly, I'm depressed. Commercial real estate is perhaps the most dangerous landmine. Office buildings are worth far less today than their financial valuation suggests. Refinancing a 3% cap rate property into a 7 to 9% rate environment wipes out cash flow. No shite. Defaults are already rising. Banks, especially regionals, hold 70% of commercial real estate loans. This is the same setup we saw in 2008. Asset values deteriorating while the liabilities remain fixed. Another danger is the Japanese yen carry trade, one of the longest running, least understood drivers of global liquidity. For decades, investors borrowed in yen at near zero rates and used that cheap capital to buy higher yielding assets around the world. It was free leverage funded by Japan's commitment to ultra-low rates. That trade helped support everything from emerging markets to tech stocks to U.S. Treasuries. That world is ending. Japan has now allowed its bond yields to rise. The Bank of Japan is backing away from strict yield curve control. Inflation is no longer dead in Japan. As Japan's rates rise, the entire foundation of the carry trade becomes unstable. Borrowers who were short the yen must unwind, which means selling assets and buying yen. When the yen spikes, it's a warning that the unwind has begun. Forced deleveraging hits markets everywhere. It's global margin call territory, and historically it has triggered turmoil across stocks, bonds, real estate, and credit markets. Suddenly, I'm depressed. All of this together leads to the conclusion that the recession is not a matter of an if. The precious metals market has delivered an extraordinary run. But even strong secular bull markets need to breathe. See, now this, if you can subscribe to the Morgan Report, David Morgan, I find him really good on the tough calls. Here's what he's saying. My view on gold and silver is they remain overbought. In other words, there's going to be a pullback. And my experience with him over the years, he's pretty good at calling it. I'm not going to read more on that because this just came out and people pay for it. And I don't think he'd appreciate it. Why is smart money rotating precious metal gains into oil? You need 1 ounce of gold today to buy 70 barrels of oil. That's out of whack. That's out of whack, Jack. Here's the most oil in the ground. You want to, as of December 2023, do you want to guess who's number one? Do you want to guess who's number one? You'll never guess it. It's Venezuela. And who are we attacking right now? And what do the banks need? So Venezuela is number one with 303 billion barrels of proven oil reserves. Saudi Arabia is still at 267 billion barrels of oil, which I don't believe. Iran is at 209. I don't believe that either. Canada is at 163 billion. Another reason that we need to make that our 51st state. Iraq is at 145 billion. I don't believe it, but Iraq is probably the last huge reserve base of conventional oil in the world is Iraq. Of course, we went and bombed the hell out of it and gave it to the Germans and the Chinese and the Japanese. The UAE, wow, 113 billion barrels. No wonder my friend is so rich. I don't trust that number, but that's a small population country. Kuwait is 102 billion barrels. I don't believe that number either. Basically, all the OPEC countries, Saudi Arabia, Iran, Iraq, UAE, Kuwait, they all, I don't know, now it's 50 years ago, they all increased the amount of their proven reserves in order to be able to maintain their high production flows, sales flows. But I don't think that inflation was correct at that time. And they've been producing these fields for 60 years without changing those numbers. It doesn't make any sense. Russia, it comes in at number 8 with 80 billion barrels. The United States comes in at number 9 with 74 billion barrels. And Libya, the country that Hillary Clinton left shattered, comes in 10th at 48 billion barrels. Wow. Wow. That's a big number for Libya. So if the United States annexed Canada as the 51st state, we would jump into the 3rd position of oil in the world. Nico Eagle reported record financial results. AIP Gold and Silver showed a material improvement. Equinox Gold solid for tuna mining. A really good story is starting to unfold. OR Royalties. Growth is coming in. Pan American Silver, the 2nd largest primary silver producer, had solid Q3 results. Will Wheaton Precious Metals. It's a great company, but let's skip over that. Members are limited to 2 questions per month. See, he's getting busy. He's getting busy. We are in the final phase of a secular bull market in precious metals. See, that's the darn thing. While you wait for bureaucrats to release capital, markets go on and on and on. But at least you have cash, which is going down. Cash is going to be valuable, though, when the market turns. He liked Vizsla Silver. So here's your top tier producers. This is how the money flows, the ones he likes. Royal Gold, Hecla Mining, Endeavor, Wheaton Precious Metal, Pan American Silver, Franco Nevada, and Eco Eagle. So as soon as institutions drive those prices up, they come down to the mid-tier producers. And that the ones he likes, Triple Flag, Equinox Gold, OR Royalties, and Fortuna Silver. And then you come down to the junior producers. You know, the money flows down. That's Aya Gold, Electric Royalties, Osisco Development, Energy Fuels. And then you have your speculations. And money will flow all the way down, particularly as money just comes in huge waves. Next year, I think it'll start in the first quarter. So he likes his speculations are Vizsla Silver, Outcrop Silver, Cantor Resources, Lionor Metals, American Pacific, Ethereum, Ripple, Encore Energy, Ominka Mining and Metals, Minerum Gold. So it's a problem. All right, so Railtown, 33.5, 50,000 shares bid for. 35.8, 52,500 offered. It's always 52.5, always. Volume 144,000. Last trade 7,541 shares at 34.54. 100 shares at 34.62. 283 shares at 34.37. Brandon Neely, why is there algorithmic trading by computers on stocks instead of just regular supply and demand? That's an excellent question. I think the reason for it is the banks and large pools of money realize that it's nearly a free good. They changed the rules on physical certificates. They changed the uptick rule. They broke the banks into two parts. They changed the I don't know what to call it, the securitization, that's not a good word. But they changed the UCC Section 8. They changed the oversight by creating the Reg Show exemption. They now have these computers that can trade in nanoseconds. And that's where Ken Griffin makes his money. That's where the one that begins with a V makes their money. And the reason they allow those computer programs to come down in stocks under $5 is because it's like shooting fish in a barrel or bobbing for apples using your hands. It's really stealing candy from babies. That's why they allow it. It's just automatic profits. Should it be allowed? No, Brandon. They shouldn't allow it. But Railtown's going to get away from it. Right now, you got to remember, number one, it's computer programs. They don't have emotions. They don't wonder. They don't have computers don't have a relationship with money. They don't remember their mother yelling at them, oh, you never saved money. They don't have their father, memory of their father yelling, why don't you go get a job? Computers don't have a complex relationship with money. They have no emotions. They have no fear. So computers are doing it. But to the extent that humans are involved, because they turn on the computers, the goal is just to press the bet. And so algorithmic trading is self-fulfilling. If you can spoof, which is illegal, if you can collude, which is illegal, if you can cross trades that don't exist, which is illegal, you can basically get the stock price going down. And down is all they ever want. Down, down, down. So you can just print your own profits. That's why they allow it. It's totally allowed by Wall Street. It's not legal, but there's lots of things that are not legal in the world that everybody looks the other way when they see it. So I mean, I don't know how it requires policy decisions to change it. I mean, one start would be an uptick rule on the over-the-counter stocks and NASDAQ maybe. Another would be know your customer. You got to really know your customer before you accept orders. Another would be get rid of the reg show exemption. Just take it away. How many times do you guys have to let money settle or trade settle before you can buy stock? Well, if you want to short it, locate your stock or you can't short it. Just get rid of the instantaneous trading. But I think they should remove program trading from the over-the-counter markets. I think it's absurd. But the reason they do it, they allow it, Brandon. It's how the Anson funds, the Toad, and lots of funds make trillions of dollars. Trillions. So the bottom line answer is, why is it allowed? Is because it makes a lot of money. It's illegal as hell. Well, the trading itself isn't illegal, but the colluding, the spoofing, the crossing, all of it, all illegal. But Railtown, Brandon, I believe, I don't know when. I mean, I've been making these predictions, but I've been wrong in terms of timing. But I think very soon. Will it be this week or next week? Not likely, but it could be. Will it be the following week, the annual meeting week? Maybe, but maybe not. Who knows? Will it be January, February, March? I think almost certainly it'll be January, February, March, but it could be sooner. And the key metric that I see out there, Lang Chain, is not as good a product as Railtown. I think they address different markets, so it's not to speak ill of Lang Chain. So does Lang Chain's value come down to Railtown's? at 50 million market cap? Or does Railtown's value go from 50 million market cap to 1.25 billion market cap based on revenues and etc.? My guess is that's what will happen. Railtown will go up, not the other way around. And if that happens, I would expect Railtown to be $5, $6, $7, $8, $10, $12 a share. And all of this noise that we're dealing with will go away. It'll all go away. As long as the revenues are there, it'll go away. G. Diddy. All right. Thank you, G. Diddy. That's awesome. Donna, China needs to sell all the land they own in our country, period. I saw where a Chinese employee is trying to bring in bioengineered worms. Imagine if they put bioengineered worms in our cornfields. Sell the land back to our government. Jason Harbison. Wow. You are the man. Jason. You bought 42,505. See, that 5 is communication. No, I'm kidding. So you're up. Wow, good job, Jason. Excellent, excellent, excellent. How to take advantage of the lag. I've seen this before. Now, I've never seen it take this long, but I've seen lags before where news comes out in a company, and I'm talking 30 years ago, 25 years ago, but news comes out, it's fantastic. Everybody's waiting on it. But then nothing happens for 2 or 3 days. But then once it starts going, what happens is, what I think's going on right now with Railtown is nobody in the Canaccord Genuity system, institutional or retail, knows anything about Railtown because it's restricted. And then the only big buyers that know anything in Canada, other than Dirty Randy's daughter's piggy bank, they only are related to Railtown or AIP and their underlying companies, or maybe Omers and Mavericks, but they're just this little clump of investors. But all the remainder of big investors in Canada, I don't think have heard the story. There's a lot of AI stories out there, a lot of them. It's hard to keep up. And every one you hear of, everybody says, oh, it's great, it's going to do this. And I'm sure they're all great, which you could argue is a negative because how do you know this is the one, blah, blah, blah. But I think Railtown, if it were in a private channel right now with Sequoia or Morgan Stanley or somewhere, would already be worth $1 or $2 billion market cap. It's just mispriced. And I've seen these lags before, is what I started to say. And so the time to buy is now. The lag could be 1 week, 2 weeks, 3 weeks. Hell, we could be into next year. And for those of you, like the one gentleman said, I need something to happen by the end of the year. Okay. Well, it may not. It could. But once the stock starts up, based on the news, based on the information, it goes up quickly. Why? Because the information is the reason, finally, that buyers commit capital to buy, and it's based on an estimate or a projection of the value of the company. And they won't take it to 45 cents and stop. I mean, I think it's 25. Yeah. Lang Chain, valued by Sequoia Capital, is priced at 25 times the market cap of Railtown. I mean, one thing you do is you multiply 25 times 35 cents, you come up with 875, and you tell Dirty Randy's daughter to buy all the stock in Canada. But another way you do it is you say, well, I want to adjust the number of shares a little bit, 20%, 30%. You don't think they're going to double the number of shares, do you? Well, assume they double the number of shares, divide that by 2. That's a $4.37 target. Guys, this thing is cheap. Unless Sequoia Capital is just a promotional machine and they're just making everything up, which they could be. It could be. But I think once the lag is over, this stock will, let's use that lower number. If institutions or research agents come out and say it's worth $4.50 a share, well, the buying will come in. It won't stop at 45 cents. It won't stop at 60 cents. It won't stop at 80 cents. It won't stop at $1. Won't stop at $1.50. Won't stop at $2, $2.50, $3, $3.50. It might stop at $4 if the research says it's worth $4.50. But the point is, once the information gets out there, this arbitrage between this completely mispriced stock and what Sequoia arguably would value the company at, that gap is going to close more quickly than you can say AOC is going to be the next president of the United States. Korean Yoon, why have I been hearing that Ham is a shill, that Ham was a fraudster? What? Well, I'm probably not the right person to ask about that. There may or may not be information out there that you can gain access to. Ham is hired by companies sometimes, not always, but he's hired by companies sometimes, like the other guys. But Ham provides a tremendous function, and I think it's completely different than the other guys do, because Ham will work hard. I mean, that guy will make 200 or 300 phone calls a day, I'm told. I haven't sat around him, but he doesn't stop. Does that make him a shill? I don't know. It makes him, it makes him an instrument in the process that the at least some situations where the short, sometimes with the company and a so-called financial intermediary, they're all in on it together. And Korean Yun, I think a lot of the stocks, without picking on him or any one person, a lot of the stocks are manipulated, and you've got program selling, and sometimes you can get some money together and pay for program buying, all trading against each other. But they need these guys to get the stock up to try to create a meme stock to try to get retail in there. Because without retail, the two computers recognize each other. And also, there's not that human emotional frenzy. The great example was COSM. And I know Cindy Lou Who says I'm blaming a dead man. I'm not. I think the system would have come up with some way to stop that. It's just it happened to work at that point. But with COSM, they got a few guys to promote the stock. They may or may not have purchased the computers to buy the stock going up. But as soon as it started to run against all the, because they were misrepresentations, a lot of misrepresentations, whether knowable or not, knowingly or not. The CEO of that company and the bankers took $35 million out of the air for a piece of crap company. But it was all because of the emotions. Everyone wanted to buy, they wanted to be in, and shoom. The guy must have thought God smiled on him or something. $35 million. Probably netted $25 million at least. It's a lot of money. So they need people promoting to get the human element in, and maybe bringing more buyers in. And then they do a financing, they kill it, comes down, everyone gets hurt. Is that fraud? I mean, I would say so, because I think it's unethical. And I wouldn't do it. But do they have attorneys that can make it technically legal and cover everybody's ass? Yeah. Look at Mark Bazile's last at least two of the settlements he arranged on behalf of companies suing Kramer's. Shareholders got wiped out. Nobody cares about the shareholders, including Mark Bazile. He cares about getting paid. I mean, he may disagree with that, but I think the evidence is right in front of your eyes. But is Ham a fraudster? I'd just rather not answer the question. I'd just rather not answer it. Ham does have a foundational argument that he's fighting the shorts, and that the system is going to cover shorts. But I don't know if he ever took the time, like I did with you, and you can go get this on your own. You don't need me to do it. But I don't know if he read this book, The Great Taking, by David Rogers Webb. The Wall Street's not going to buy in stocks. You can cause, there are squeezes that happen, but it's always a unique surprise set of circumstances. And then the system will kill the squeeze. And I'm not blaming a dead guy. I'm saying that the system will try different things. In that case, it's just that having Lou and Frank and the CEO misrepresent the story to shareholders and buyers, whether they did it intentionally or not, I'm not going to comment. But the story was absurd, but everybody ran into it. And COSM plucked $33 million out of the market. And so those people who got paid to do that, were they fraudsters? Were they shills? They got paid a lot of money. Frank and others. Frank made a killing on that deal. Killing. My opinion, Korean Yoon, is once Railtown works, and that's, it's an open question still, but I believe it will work. We just want to get away from these stocks under $5, any over-the-counter stock. Probably 98% of NASDAQ stocks, at least under this twit, Adina Friedman, and you just don't want to listen to the stories anymore. And you could argue that Ham is fighting against the shorts, but if he doesn't adjust his game plan for the fact that securities entitlements exist, is he doing something? Is he like Don Quixote, or is he like Don Corleone? I don't know. I don't feel qualified to answer it. Justin Babish, maybe Railtown employees in Canada can put bumper stickers on the car with it. Look, Justin, it's not going to matter. I'm telling you, once they get out of this, they may be in a legitimate quiet period right now because of earnings. But once they get out of this confidentiality period, which the first major step was filing that the AIP deal is completed, and it is completed, it's finished. But now you may have other steps like discussing the TELUS revenue deal. That may be material and that may need to be disclosed. I don't know. I'm making that up. They may not want to disclose it. I have no idea how it's going to go. Or it could be that there's another transaction somewhere or more than one that we don't know about or are so big, and those are material. So there may be additional things that are material that need to be announced before this confidentiality period ends. I had heard all along from various different people that they're, the breathless, there's people ready to buy, there's all these buyers. And then I heard that some of those buyers, many of them, are going to wait for research. I'm like, what the hell? What is it? Are there buyers chomping at the bit, or are there buyers that need to see research and then told the story and then they'll get excited? I don't know. We'll find out. But Justin, I think once, whatever it is, holding up the end of the confidentiality period, once we get through that, which I think is a matter of days. I don't think it's a matter of weeks. I mean, it might be 1 week, but I don't think it's going to be forever. And then perhaps to the extent that research matters, but that's all coming soon. I bet it all clears up or reveals itself before the annual meeting. And Justin, when the buying comes in, people aren't going to need to drive around with bumper stickers. You've never seen anything like it. You're going to see the stock at a different price, and you're going to go, what's going on? And it's just that the story finally is told to the people who can buy and hold, and to the people who can say, you know what, this is just like line chain. And then you won't need anyone driving around with bumper stickers. I mean, they'll probably want to drive around with bumper stickers. But they'll probably all drive around with Canada, America's 51st state bumper stickers. Or they'll drive around with catch the National Curling Championships, January 6th through 11th, eh? Justin Babish, get the word out and advertise. Yeah, it'll spread like wildfire. The problem is, I like the term, I don't know who gave it to me yesterday, but the idea that it's a confidentiality period, CA, confidentiality agreement. Once it's over, the enthusiasm for Railtown will be slow at first, and then it'll catch fire. That's my opinion. Jason Harbison, William, being an over-the-counter stock, there are no... Oh, here you are. Okay. There are no volatility halts. It could get interesting if a few major players try to buy 5 to 10 million each. Yes, except it's a Canadian stock. So I don't know if there's halts on the Canadian Stock Exchange. But you're right. Technically, even if the Canadian Stock Exchange were halted on the over-the-counter, they could keep trading. But I think your basic point is correct. If you have one buyer, the stock's going up. But if you have 2 or 3 buyers that each want, let's say, 5% of the company, or 2.5% of the company, it's a whole different pricing deck. It's a whole different story. You just haven't seen that buying yet. And so the shorts, and they'll try to do it today. They've got the bid at 33.4. The close yesterday was 33.77. So that if someone hits the bid before the close, it'll be red. They want you to feel punishment every day. Every day is red. That's just their psychological game. And it works. It works. But now you got a 36 offer on Railtown. It'd be interesting. I think Railtown is showing the signs that it wants to go up. 265 shares at 34.88. Unbelievable. Unbelievable. Let me go back to Brandon. Any idea what Lang chain costs? Well, I don't know the context of your question. The way it struck me initially is, what are Lang chain's costs? And whatever, I don't know the answer, but whatever they are, Lang chain does not make a profit. But what does Lang chain cost? Well, we know that the last round of funding by Sequoia, led by Sequoia, for Lang chain was they raised $125 million with a dozen technology funds and others. They raised $125 million at a $1.25 billion market cap. We know that. But I don't know how many shares they have outstanding. They do them in these series, tranches of the Series A, Series B funding. I don't know how many shares they have per share. But as a market cap, Railtown costs 25 times less than Lang chain's value. If Railtown is first in class, it has to be higher cost, just like a BMW costs more than a Nissan. Well, okay, I see that. Yeah, I would argue that Railtown is worth more than $1.25 billion if Sequoia accurately priced Lang chain. We have to all agree that these multiples are quite rarefied. They're up there, but yeah, I would say Railtown's worth more than Lang chain. And I don't know if I have it here still, but yeah, I do. I mean, just look at these. You can't see all of the checks, but look at all the features Conductor has, all green. Lang chain has 3 of them. And on this page, Railtown has essentially all of them. Lang chain has 2 of them. So I don't know enough about it to know if each of those characteristics are critical, but I think Railtown's product is better. And so, yes, I agree with you, Brandon. It should garner a higher price. Jacqueline, does that mean Finger will probably not go up? I don't think Finger's going up until they get the financing done. I mean, anything's possible, but Finger right now is 126 to 127, and I think my target, albeit it was 2 or 3 months ago, was my target, was 125. Partly, I just didn't want to put a target out there of $1. But right now, Jacqueline, I'd have to say at $1.26, and we're in December, if a financing were to come right now, I think it'd be done at $1 or below $1. Now, what could make Finger go up is, like any stock, is big surprises out of the blue, like a major contract, an alliance with a large company. Um, um, Great revenues from the C2 contracts. Um, there could be, I can't make up a hypothetical, but, if Pacific Life Re all of a sudden uh, signed their first contract, which actually had monetary value, and you could project that the revenues would go to $1 billion a year, the stock will go up. So it's always possible that you're going to have these outside the box positive surprises. But you can't count on them, obviously, but they could come. But you do know with finger motion that they're losing money every month, and they're going to have to raise money. They just have to raise money. And I've never seen finger motion raise money except for the one time that Ham's friend put in money at $10. I've never seen the company raise money at market or above market. It's always been below market. So I don't think, Jacqueline, we're going into tax loss season. I think who knows, but I think they'll do a financing before the end of the year to get it out of the way. And unless there's some surprise positive event, like, I don't know, that they it's hard for me to know what to make up here, but maybe they signed an agreement with the Chinese government to track all transactions throughout the country, across any phone or something, some huge contract. That might change it, but I would think that by the end of the year, finger motion will do a financing. I don't know how much they can get done, but I would guess it'll be at least $5 million. Could be more, could be less, of course. I really don't know. But they need probably $1 million a month to be secure. So do they want to raise 6 months or 3 months worth of financing? I'd say at least 6 months. It'd be great to have 12 months. So I think you're going to see a financing before the end of the year. Will I be right? I have no idea. But if there's a financing in finger motion, it'll be below the market. Now, once they do that, Jacqueline, next year, I think you could see positive events, positive revenue projections, and maybe earnings projections. And more than once, if the stock is kind of trading at a low price in that January, February, March timeframe, there's been a run upward in the stock. So I think you could, I'm not calling for it yet. I'd have to see the momentum and look at the chart. But it's possible after the financing, you'll have a chance. Possible. I'm not predicting it yet. But if it behaves the way it has behaved at least 2 times before, you might get a chance to double or triple your money on a trade in the first and second quarter next year. So nothing is a permanent situation. But Finger just closed at 126, down 7 cents. I don't know why I have that one up. Oh, because I'm talking to you. Railtown closed at 34.83, up a penny on 169,000 shares. Last trade, 10,000 shares at 34.83. I can't tell if that was driven by buying or selling, but it's a pretty big trade. So to answer your question, Jacqueline, I don't think Finger's going to go up. If I had to put a probability on it, I don't think it's a high probability that Finger Motion's going to go up between now and the end of the year. And if it does, I don't think it'll be meaningful. You know, there's always a chance of a surprise, but once the financing, look, maybe I'm wrong. Maybe they don't need to raise money, but this is a company that does about 35 million in revenue, and I don't know how to read the accounting. I'm not an accountant, but after accounting, they lose $500,000 a quarter. I think if you take out all the clutter of accounting adjustments, I think they're losing, $1 million a month. So they have a burn rate. So they're going to have to raise. They're going to have to do a financing. And but the company still only has about 50 or 60 million shares outstanding. It wouldn't take much to get people excited about owning it again. And so I think you'll have a chance to possibly have a chance. I'm not ready to call it yet because you got to feel the momentum. You might get a trade in the first and second quarter of next year. But between now and the holidays, you got tax loss selling, the likelihood of a financing, and I can't think of any news. But who knows? Who knows? I'm not trying to pick on the stock. Railtown, I've been wrong on that, on my positive projections. I feel myself turning kind of worn out on Railtown. But I think Railtown could give you surprises to the upside by the end of the year. Surprises. All you need is one major buyer. All you need. Let me see what else you said. Nothing else. So anyway, Jacqueline, that's kind of my reaction to that. I don't think Finger's going to go out of business or anything. I don't think they're, once the stock's under $1, there's a lot of pressures on it. But I don't think it has, I don't think Finger is going to become a seller box stock, at least not overnight. But I think Railtown's a better place to be. When Railtown gets, as I think it will, gets to 35 million in revenue, it'll be majority profit. And that's a huge difference. And it'll be growing. And anyway, I don't want to say anything bad for I don't really want to come across as attacking Finger. I'm not. It's just looking at what's going on. I wish I knew who Andy was. Andy BB. I don't know who Andy BB is. But that's a great position. 200,000 shares is amazing. Absolutely amazing position. I'm wondering if I have you listed what name it is under. I don't know. It's weird how names show up on this system. But that's an amazing position, Andy. I'd be yellows, but it's not it's not um, it's not an appealing way to be. I love it. I'm so happy for you. Congratulations. T. Alex, how about hitting the thumbs up for William? Thank you, T. Alex. Did some more AI investigating about a week ago. From I'm Almost Legend, did some more AI investigating about a week ago regarding how long it takes for research reports to come out after an amalgamation merger is completed. It takes at least as long as it takes the research analyst to look up the word amalgamation. I'm Almost Legend. Typically 1 to 4 weeks after a merger closes was the answer. Why? Analysts wait for the company to file updated financial structure, share count, and guidance. Absolutely. I think we're waiting on a financials. I think for the analysts, there's enough information out there to get close to the cap table numbers, the structure, the structure of the deal and the share count. However, they will want to see that finalized number. So you're right. And then guidance. And that, I think, is the key thing that's tricky. Because if the company is still in, let's call it a confidentiality umbrella time frame, they might be able to talk to analysts, but the analysts, they may have to say to the analysts, you can't use any of this until such and such and such is released by news, and we don't want you to use it for at least 2 or 3 or 4 days afterward, something like that. And we don't know. But guidance is really important. And in fact, I would suggest to you that the company may defer, they may speak through analysts. They may not tell the analysts what their revenue is going to be, but they can tell the analysts, look, this is our order book. This is our success rate in closing the order book. This is our costs as we see them. This is what we on average charge a company, and this, et cetera, et cetera. And then the analyst can make her own projections, and then the company can allow the analyst to be doing the projecting. The CEOs have a really tough job. They cannot be promotional in their stock price. The shorts, the criminals, they can be negative and they're not going to jail. But if a CEO is promotional, he could lose his ability to be CEO or even deal in the financial markets at all. So let me keep reading yours. They also wait for the company's first post-merger press cycle or management call so they can model the new entity accurately. I think you're right about that on Railtown. I think analysts from Canaccord to TD Bank to I don't know, Fidelity, whomever are going to do that. I think the one exception is this Research Capital or Capital Research. They already have research out. It's a new analyst, so it may be the way you suggest, I'm Almost Legend, that they'll wait for the earnings conference call, or they'll wait for some public management discussion where there's questions and answers taken. But I think in the case of research capital or capital research, I always get it back assword. I think they're going to jump the gun. I think they're going to want to be out there before anybody else. But I could be wrong about that. Smaller cap companies sometimes take 4 to 8 weeks if disclosures or updated management discussion and analysis lag. I'm almost legend. For Railtown specifically, if they release updated financials and a clear post-merger outline soon, expect 1 to 3 weeks for new research notes. If disclosures lag, it drifts toward a month or more. Yeah, I'm going to stand by it. I think this capital research capital, I think you could see this research out this week or next week. The others, I think you're right, because it'll be a news story. They'll want to get comfortable with it. Analysts don't like being embarrassed. They want to keep their job. So I think that's right. So that's good information. I'm almost legend. I don't think it's going to be a month from now. Although it's interesting, I'm almost legend. What happens if some of the analysts wait for the annual meeting and then they want to publish their report, but it's holiday season? I think they publish their report before holiday season. That's what I think. So I think you're going to see some research reports prior to the end of, prior to the holiday season, prior to the end of the year. But we'll see. I like your research. Let's see if we're at war. It doesn't look like it, so that's good. Well, I'm wrong. According to Martin Armstrong, Maduro refuses to flee. The United States is going to attack Venezuela. So what happens with regime change in Venezuela? With regime change, the banks can come in, Exxon can come in, other companies can come in, and they can cause the regime to take out loans against, for example, the world's largest oil resources. And then that 300 billion barrels of oil becomes collateral in the international banking system. I think it's all about a search for collateral. I think all of this war is banker, banker, banker. Anyway, I'm going to uh, leave it at that. I'm going to put this up one more time. Just in case anybody can help out. I really appreciate everybody else that has donated. Um, um, but I'm still asking, and it's not because it's not because I don't need it. I mean, I'm just, it's the situation I'm in. So anyway, I really appreciate everybody signing in. Um, uh, and It's 4:16. I'm going to let it go there. Um, I hope everyone has a peaceful night. I pray for peace in the world. Hopefully, President Maduro will flee. Uh, but that's regime change in and of itself, I suppose. Um, but anyway, let's leave it there. I love that some of you guys have been adding. I love everybody standing in there. We're up to 15,750,000, and that's just terrific. So let's leave it until tomorrow. Peace, love, and happiness.